Hello, I am Samrat. I am from India. I am doing my MBA from IIT Kanpur. Today I will be comparing Alphabet versus Amazon. So first I will look into Google or Alphabet. So first I will look into the CFROI level. The CFROI level was high in the beginning. It started decreasing gradually. In the future, over here as shown in the red dot, it will decrease, but it will almost remain stable. The volatility of the CFROI level is quite less. The CFROI level is always above the cost of capital, which is shown by this green line. The asset growth, the company focused on growing the assets in the beginning, but it slowly decreased gradually. The price performance is quite good. Over here, the market has accepted the price, the stock price. The company has just started. It may be the start of the fade phase. The company may need to look into the restructuring or reorganizing. Now we'll look into the sales growth, margins, and asset turns. Sales growth has decreased, which is quite evident from the asset turns. However, margins over here are pretty stable, means increasing cash flow, though the sales has decreased. The stock is clearly undervalued with potential to increase. The green line, the Holt warranted price is above the high low price over here. The management needs to focus on increasing CFROI, which is hopefully possible with the advent of the new technologies. The deviation is also over here is also less than 20%, which is a very good sign. The scorecard percentile is relatively better than Amazon. It is in the 64th percentile over here. However, concentrating on operations, which is a bit less, and the momentum, which is also a bit less, will help more. The risk factor shows that it is a good investment to do. It has a good rating. So now also into the Amazon. There were huge cash outflows in the beginning, concentrating on asset growth. Here in the company life cycle phase came the growth and the mature stage where the CFROI level increased gradually. Later we'll see that there is this possibility of fade because of the increased competition, because there are a lot of competitions that has increased. Company may need to think about the restructure. Also a steep decline in the market expected future CFROI than Alphabet. Sales decreased, but asset turnover has increased. Hence, utilization of the asset is good, but the cash flows generated are reason to worry. The margin is too less, clearly a very overvalued stock. Deviation is below 20% over here, which is a good sign. A very low percentile in the valuation and the momentum. Also, it affects the overall scorecard percentile. Needs to improve in many areas. Risk is about average. So, considering all the factors, I would suggest to go with Google than Amazon for a better investment.